this is a really great company. It's sort of a premium multiple. It's pulling with the revenues. But David, like if you've ever been to a foundry, I've been to a foundry when they're first starting a new run, and they just throw away a huge amount. And I think that, not that Jensen necessarily got it wrong, but the yields were very low.
Yeah.
So in other words, like when
you know what? Actually, we have him talking about it on the conference call.
Oh,
let's take a listen to what he had to say in particular about that ramping up of production of those new Blackwell chips.
The data center worldwide are in full steam to modernize the entire computing stack with accelerated computing and generative AI. Hopper demand remains strong, and the anticipation for Blackwell is incredible.
I guess that wasn't.
You just can't make them fast enough. You can't. And so there's a hit to gross margins, and that bothered people. But I also think that, David, when you have NVIDIA watch parties out loud, when you have, say, like in the Premier League, these teams that Wilf can talk about, I don't know, they're in strange British cities.
Yes.
What happens is that,
there's a
well, there you go. That's a watch party.
What's good is that what they're watching is us.
Well,
that's CNBC, so I'm happy about that.
Right, but no, and that is the correct takeaway, of course.
Thank you.
But I do think that
this is the market's reaction to Nvidia's earnings, highlighting how the stock initially dropped, but later recovered slightly. He emphasizes that while Nvidia is a great company deserving of a premium multiple, there were concerns over production yields, particularly related to its new Blackwell chips. Cramer notes that Nvidia's inability to produce enough chips fast enough caused some concern, particularly regarding gross margins. He adds that Nvidia's data center business remains strong, with demand for its chips continuing to grow, despite the production hiccups. Cramer also touches on the broader implications for Nvidia, including its role in the accelerating computing landscape and generative AI. He mentions that Nvidia's gross margins, which are higher than even Intel's at its peak, are impressive, making Nvidia a standout in the tech sector. The company's ongoing revenue growth and its continued investments in data centers and AI make it a force in the industry, though Cramer suggests some investors are now viewing CEO Jensen Huang as more fallible due to the recent production challenges. Despite these concerns, Cramer remains optimistic about Nvidia's future, particularly its potential to drive significant advancements in industries like healthcare through AI. He notes that Nvidia's technology can have a transformative effect on drug discovery and other sectors, pointing out that generative AI has a promising future. While there are challenges ahead, Cramer believes Nvidia is still a strong investment, with many years of growth and innovation to come.
Yeah, well, let's get to it now.
We're done with Nvidia?
Well,
you want to critique the watch party?
Jim, this is Squawk on the Street. We're never done with Nvidia.
Thank you.
But we may not mention it for the next 45 seconds.
Okay, that's fair.
Okay. By the way, Nvidia shares are down less than 2%.
There was nothing wrong with Nvidia. There was nothing wrong with Nvidia, other than the fact that they couldn't get the yield right.
Right.
And by the way, there was a debate about air-cooled versus water-cooled, which was a total sideshow. There was a debate about actual use cases, total sideshow, because he's telling you what the ROI is and how magnificent it is. He gave you every use case. When I spoke to him, David, I said, well, it's your cancer. He said, no, but here's what it will do. It will be able to very quickly go through databases and find out what are the genes that commonalities say melanoma, and then be able to work backwards.
There's a hope for generative AI,
yes.
And I think an expectation almost when it comes to drug development and discovery, it will speed up that dramatically.
He calls that tech bio. And what Jensen said to me, it's still not, the big drug companies have not adopted this
shit.
It's
still early, Jim.
Right, well, that's what I'm saying. You have multiple years ahead of you.
Yes.
And people just continue to think, like a la the watch party, that it was an NFL draft and it was the Giants and they drafted poorly. No, not true. No, I mean true about the Giants. I mean not true about Nvidia.
Giants, yeah. Well, they got one good offensive lineman a couple of years ago, but otherwise, man, it is not that great.
Wide receiver.
This year, Neighbor's going to be good.
But I do think, David, that the theory of last night is reality, which is that AI is going to begin. ServiceNow, then Salesforce, obviously Meta. He's furiously, Mark Zuckerberg, Meta AI, which is his GPT, he's furiously trying to catch up to the others. But does he catch him passing because he has all this data about social media? What are you looking at?
August was, of course, a volatile month for the Dow, S&P and NASDAQ carving out gains, with the Dow and S&P hovering at fresh highs. So what will September bring For stocks, as we get ready for a jobs report and possible Fed rate cuts, joining us now, Fundstrat Global Advisors, Head of Research and CBC contributor Tom Lee. Tom, great to have you with us. NASDAQ, I should clarify, will only have gains if it continues its strong session today, so it won't be significant net gains. Tom, great to see you. Long time no speak. First and foremost, what's your reaction to how the market is processed Nvidia's numbers? It, of course, fell initially in the pre-market. Yesterday morning it was doing all right, and then it did close more meaningfully down by the end of the session yesterday.
Well, I think Nvidia is one of these stocks that has become part of like a stock market lore. Almost everyone has a position, and I don't think the results and the earnings changed anyone's minds about AI and the central role it's playing in both global productivity, but also Nvidia's role. But I think the sell-off tells you that a lot of good news was priced in. I think that's why the stock fell. It didn't take the broader market down. I think that was kind of a positive outcome, and I think it just shows you that there's room for a lot of rotation, and I think that it's revealing that small caps is one of the groups benefiting from that rotation.
Let's talk about that rotation, Tom, and the extent to which there's still a long way to go if you're looking at the valuations of some of those sectors that haven't done so well in recent months and years, or whether things have bounced enough across the board that you start to get a little bit concerned about valuations for the entire market, not just the Nvidias of this world.
Yeah, valuations are definitely something our clients are asking us about because, the equity markets have been rising for several years. But the idea of a rotation, I think, is grounded on a couple of things. One is that the Fed's rate path is lower, and that benefits cyclical stocks and small caps. And we know there's also a lot of cash on the sidelines, and investors de-risked because of the yen crisis and just general concerns about the summer. And so I think the Nvidia results plus the Fed in September is really the catalyst that it's going to get some investors to actually follow through with it.
That plus the National Nvidia Day and how the nation kind of stopped at a certain point.
Yep.
No, I mean, we have to go back to reality, which is that Nvidia is a company and Jensen is a man. And they did have some product issues in terms of what I regard as just being, look, we didn't make as many as we'd like. But 2020.
But demand remains unabated,
Right.
clearly. We've talked about, of course, the continued CapEx plans of all of the largest companies in the world.
45% of the business is them.
And data center revenues at $26.3 billion. Again, to put it in perspective, you're talking about what is 2.5 times what it was not even that long ago.
In the whisper, I was out with a prominent
April of 22
semi-executive last night. He said, "Who makes these whispers?" And I said, short sellers who then give it to their compadres on the sell side so that the number's too high and they have to be $2 billion and they can't, so the stock gets robbed.
Well, let's come back to multiple. I mean, the one thing, and I'm reading here from Stacy Raskin, who's typically the most significant,
has distinguished himself.
Yes, of analysts in this area. He says the one smudge on the report was end-of-year gross margin outlook.
Right.
Which does seem down a bit as Blackwell begins its ramp and the H200 mix increases.
That's true.
Although he says he thinks the overall gross margin into the fourth quarter should still be very respectable. I mean, by the way, the gross margins, just look at it as a business.
75.
Step back and just look at this business. 75% operating margins?
They used to try to get to 60% at the height of Intel. They would get to 63% during the period where everyone knew that Intel was the greatest company on earth as a manufacturer. And these guys are blowing that away. They're just blowing it away. Should it get with given that, what do you want to give it, a 25 multiple?
Well, that's my question to you. All right. Revenue growth, more or less, at least for the near term, seems unabated. We can have the longer conversation about when the CapEx spending starts to slow or when, frankly, Gen AI is taking in all the data available in all the world and therefore
that's the worry.
You don't need the chips anymore. That's years down the road, perhaps. But right now, revenue growth strong, gross margins, the likes of which we've rarely, if ever, seen. So what's a appropriate multiple for this company?
Okay, so let's say they're going to do it a calendar year. Let's say they do $5, calendar year 26.
EPS number.
Yes.
Correct.
So give it a 30 multiple.
Right.
Why not?
Why not?
Give it a 30 multiple and you've got a stock that's down $30 now from where it will be. But now it's become a little more show me because we now realize that Jensen won in the end. is fallible. We didn't think he was fallible. Now he is. So maybe some people feel like we can't give it that multiple. I don't think that's not a big tall order. Give it a 30 multiple on a $5 number. What the hell?
Yeah.
Why not?
Yeah.
But I think, David, we all were kind of surprised to hear that there were yield problems. We kind of felt that it was turnkey. We should never have thought it was turnkey.
It's not easy coming up with a new chip, and they were putting some.
Well, but you know, one of the things that he emphasized over and over and over again is the return on investment is radically great. In other words, you get it and you do really well, because accelerated computing is one part of it, and then the generative AI. And he emphasized accelerated computing. He emphasized the need to replace $1 trillion in current
in the fourth quarter. They expect to ship several $1 billion in Blackwell revenue.
Yeah, but people are thinking about tens of billions, so they're not going to get that.
Right.
But when you're
copper
still
demand strong,
right, you're still
shipments
taking over $1
expected to
trillion.
increase in the second half of fiscal year 2025.
And how about the industrial implications? They were very good. The auto was very good. It was not just Meta and not just Amazon and not just Google and not just Microsoft, which, by the way, was mightily attacked on the Mark Benioff call, as we'll get to soon.
In conclusion, Jim Cramer highlights Nvidia's current challenges, particularly around production issues with its new Blackwell chips, which have raised concerns about the company's gross margins. Despite these hurdles, Nvidia remains a dominant player in the data center and AI industries, continuing to grow its revenue and maintain strong demand for its products. Cramer points out that while CEO Jensen Huang may now appear more fallible due to these setbacks, Nvidia's overall performance, particularly its gross margins and revenue growth, remain impressive compared to other tech giants. The company's potential to drive innovation in fields like healthcare through generative AI further strengthens its long-term outlook. Looking ahead, Cramer emphasizes that Nvidia's role in accelerated computing and AI remains crucial, with strong demand across various sectors. However, as investors consider the company's future, questions arise about appropriate valuations and whether Nvidia can maintain its current momentum. Despite the bumps in the road, Cramer is optimistic about Nvidia's future, citing its continued leadership in key technology sectors and its potential to transform industries. Do you believe Nvidia can sustain its impressive growth despite recent production issues with its new chips? What do you think is an appropriate valuation multiple for Nvidia, considering its leadership in AI and data center technology?